What is up, guys? I'm using a different microphone today due to traveling, so my apologies for the audio quality. Do a little microphone check, 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 check. Okay. Yeah, so again, apologies for the audio quality. I'm using just some headphones traveling. Let's break down what we're looking at going into the market. So I talked about this on the weekly review video, and so I'm going to go through it pretty quickly. We're going to be looking to see if the market wants to dig further down into the sell side liquidity. If you go on the 4 hour, we have this wick. As you can see, we've closed below it on the 4 hour. I think what we're doing right now is we are retracing up into this fair value gap. You can see we closed these bodies at the consequent encroachment, and I'm going to expect us to go lower. Again, remember, this is a 4 hour chart, so we might not get to this line today, but we are, as we watch it, we do see it respecting bearish PD arrays, and it is looking, the order flow is looking bearish. So that is what I am expecting. Even the 1 hour. The 1 hour does look like it kind of wants to turn over. See, we had a few candles print and respect that consequent encroachment of that higher time frame. So dollar, we are bearish. If we start printing new highs, so if we get above this fair value gap in the 4 hour and above this white line is the mean threshold of that wick. If we get above that today, then we can kind of reassess. But right now, as we are above the consequent encroachment of this fair value gap, I'm expecting continuous downside. If we look at ES on the higher time, actually, let me go to NASDAQ because that really depicts this a lot better. So I'll go NASDAQ first. On the daily, you can see we took this high. Again, I'm just kind of recapping that market review really quickly. We have this volume imbalance right here. I am expecting us to get further above these highs, but it might not happen today or this week. We are in a holiday week. I will not be trading Thursday, Friday, and I would highly suggest you don't either. If you want to know why, I kind of explain it in the market review, in the weekly review. Let's go down. So again, we wicked above this high on this day and now on this day, taking this liquidity. So keep that in mind. This is a large pool of liquidity that we got above, meaning that it can now kind of, it ran those stops and it can retrace a little bit. If we go down to the one, I'm going to skip right to the 15-minute because it looks like there's a pretty, like a 15-minute market maker sell model happening. Right here we have the original accumulation. As you can see, this is a range from last week. Then we open with the new week opening gap, and then we move far away from it. What happens? Remember, this is the narrative. We're building a narrative right now. So we had consolidation last week. This week we open and very quickly run away from the new week opening gap to this higher time frame level, this volume imbalance up here, to this volume imbalance, and then also tag a very long-term daily high, which is this green line. We did that right here. See, you can see us go over it just a little bit right there. That was yesterday. Today we retrace, and then overnight we come back up, and you can see right here we tag the previous day's high again, entering into that higher time frame. And as you can see here on the 15-minute, this is a pretty good market maker sell model. It doesn't show up that well on ES, and I'm going under the context that you kind of understand the market maker models, so I'm not going to go too in depth here, but these boxes, we have the original accumulation down here in this black box. Then we have the first stage, the second stage, smart money reversal, and now we're going to focus on the sell side of the curve. This right here, I think, was a pretty significant low because it was the lunch low, so you can see it's at 12. It was the lunch low from yesterday. So I know if you watch me in the PM sessions, we often highlight the lunch high and low. But even in a scenario like this, where, in this PM session, we were so far away from it and we just continued higher. Now that we're delivering the sell side of this 15-minute model, this is a good area of liquidity to call out still. And as you can see, we are respecting it. Price is showing, we came down, touched the top of it right here, and we wicked below it and then kind of got sensitive. So it's showing that it is a sensitive area for the algorithm. Now, going into our 9:30 trading, what we're going to have to look at is we have this first stage. And again, these areas right here are kind of up to interpretation. ICT said that himself. They're not set in stone. It's really up to, because this is a narrative we're building. So somebody can, for example, label this whole thing the first stage distribution, and somebody can just label this the first stage distribution, and it tells the same narrative. So don't get too caught up in that. But it does get a little hard when it's, okay, if this is the first stage distribution, where's the second stage? Is it this? Some people might call it this, and I don't think you're wrong if you do that. But we could also see a retracement into this fair value gap, and maybe come this morning session, a consolidation that's part of a little bit of a retracement, and then come 10, we finally run for the top of this original accumulation. Remember, the market maker models end by returning to the original accumulation. Ideally the lows, but I'm going to hesitate for that because remember, our daily narrative is higher. And if you look at the 4-hour, again, this could be, remember how everything's fractal. So you really have to understand the narrative. What is your narrative on different time frames? And make sure you're not working too hard against that. So if our daily narrative is these highs, then yeah, we can sell short intraday on down close days. But make sure that short is is under the right context. You shouldn't be trying to short and then, catch the entire daily range down, or short. Yeah, like that's not something that is pretty ideal, is to try and short and predict that you're going to catch the entire daily range down when we know our daily draw is to the upside. Because that daily range down can be a small range candle. You don't know exactly when. It's just the odds aren't in your favor. I'm not going to go too deep into why in this video. But what I am trying to say is, on the 4-hour, look how nice this consolidation is also on the 4-hour. This could be the start of a 4-hour market maker sell model, for example, if we're thinking of time fractally. So these days were just us leaving the original accumulation. And if I go down to the 15-minute, I mapped it out this large, but see how on the 15-minute we have this aggressive leave, return, and then we did the buy side of the curve. Well, if you look at the 4-hour, you could It kind of looks like it might be the same thing going on, where accumulation, aggressive leave, return, and it doesn't have to return. But I'm just saying, remember, this could be, I say all that to say that if this is the start of a 4-hour larger time frame market maker buy sell model, which would make sense because it would get us above all these highs that we've been targeting. If that is the case, then we would be trying to go short in like a 4-hour buy program, which isn't smart. So in terms of this market maker sell model in the 15-minute, we need to be very careful that if we are going short, the liquidity we're targeting, that we don't get caught up shorting the buy side of that higher time frame curve. So I hope that all made sense. How I'm going to use this, I'm gonna hope to see between 9:30 and 10 something that forms that looks similar to a second stage distribution. Now, I do think this could be considered the second stage distribution, and you can also get another retracement into an entry that happens after a second stage distribution. And I think this could be the second stage distribution just because you have such an aggressive sell-off here, and that's a characteristic that is normally happens after the second stage. But we haven't returned back to the original accumulation. So, and we have a decent ways until we return to that. So if we are targeting this box as the original accumulation and probably this new week opening gap as well, if we are targeting that, then if we draw a fib to the top, we are right around that premium level. So it would make sense. Sorry. So it would make sense to have an entry in this premium to then sell to a discount. And that's what we'll be kind of looking for. Again, it really depends. I really want to watch this opening range and see how it plays out. I think it could get heavy, but again, I could see it retracing. This is a 15-minute, so I'll be watching this fair value gap. I want to see this act as breakaway gap. And if we go, let me show you the ES. Now ES is a little more difficult because as you can see, we have this high, and whereas on NASDAQ, this was a higher high. So I like that on NASDAQ, and I don't like this so much on ES. As you can see, this sell side that is being delivered, the buy side was delivered very nicely. And the buy side, again, look how clean this buy side is. It's consolidation, run, retracement, run. And that's because it was seeking that higher time frame daily high. So it was targeting this high that we've been talking about. And ES has been, kind of the sixth sister. It's been the lagger to the upside in compared to NASDAQ. So I'm not surprised that it was so aggressive and trying to catch up and take that liquidity. But remember, since it is the lagger, once it took that liquidity, it again continued to show weakness. So that's a lower high. If you want, you could kind of call that the second stage accumulation, and that's the reversal. I think it's really clean on NASDAQ, and I don't think the fact that you have this SMT here really disqualifies much, because this is very clearly a buy side delivery. So I'm going to expect a measure of sell side, and this sell side is pretty sloppy. So I think I'll be looking more at NASDAQ today. But yeah, so that's kind of the narrative for today. I'm wondering if in the morning, we're going to retrace. Again, remember we have FOMC at 2 p.m., which is, I feel like is going to induce a decent amount of volatility. So we could see these highs revisited if the FOMC meeting minutes say something wild, or if the manual manipulators of the market want to use it as a guise to send prices higher. I'm going to go to the 3 view. So again, on the 15-minute, we will be playing this on the 15-minute with our narrative and really be targeting, and we'll be targeting on the 15-minute, and then we'll be entering on the lower time frames. I will say we should watch this order block right here. Again, remember what I said about on the knowing what where your narrative is and what time frame it relies in. So again, this is a 15-minute market maker sell model, but I kind of just showed you that 4 hour could be the beginning of a larger market maker sell model. And if that is true, then we don't want to be shorting during when, say, that higher time frame is starting to go up. So I wish we wouldn't have taken the sell side liquidity as soon as we did. That's fine. What we'll probably do is see if we can find a safe entry, because we do have a long distance back to this original accumulation. So I'm not too worried about us missing an opportunity. And if we miss it, we miss it. So in terms of this 15-minute fair value gap, I do want to see this one act as a breakaway gap. I wouldn't really like it if we retraced that much. Again, remember, because of this higher time frame narrative of we are still bullish. So if we retrace this much, especially after taking this sell side right here, I'm not going to try and short, because if we're retracing that much, it could be reversing. Versus if, remember, when price enters a fair value gap like this and doesn't go higher, the more immediate, or the less it enters a fair value gap, the more it's showing you that it really wants to run for its target liquidity. So if this doesn't even get returned to, then that is a signature that, oh, it really wants to run for sell side. And then if it enters this and then displaces, then it's like, oh, it really still wants to run for sell side. So I like the fact that we entered that and are now breaking lower. As you can see here on the 5-minute, it kind of came up. So I will highlight this 5-minute fair value gap, just because I think, again, remember, if we are looking for another distribution box similar to this, sometimes they can look like a consolidation. For example, this one isn't much of a consolidation, it's more of a retracement, and then it goes. But you can have them look like this. And if we do, for the next 5 minutes and then the 30 minutes between 9:30 and 10, kind of trend sideways, for the market to engage liquidity or build liquidity, I could see it tapping into the top of this and then going lower. It's not that much higher, so I do want to call that out. But again, remember on the 15-minute, we entered that fair value gap. On the 5-minute, it looks like, oops, the 5-minute, we came up and wicked over that Wicks consequent encroachment. I like the way this looks as a change in the state of delivery. This candle right here. Again, so the CL line in the background is the dollar. I like how the dollar looks like it's about to make a lower low for the day. As you can see, it's coming. Actually, no, I don't like that. The dollar. So again, we want to be wary of what the dollar does. If it starts getting really heavy, then again, like I said, if it gets heavy after taking the sell side liquidity, it could be the signs of a continuation on the higher time frames of buy side. So this is an example of our current dealing range. If you see, we are still in a premium. So again, we'll be targeting entering in the premium and then selling into the discount. So I don't think we'll get a 2022 model between 9:30 and 10 just because we've, moved so much. Usually those models form when the Asian and London ranges are more in consolidation. So since we moved, we probably won't be taking a 15-minute high. I'd like it when we take 15-minute highs for that, and we've been in consolidation. So that means we're probably going to be playing the silver bullet today. So in terms of the silver bullet, kind of like I outlined, I'll be looking to see if it is in the sell side direction and completing this market maker sell model down to the new week opening gap, or if on the higher time frame, this is how much it wants to retrace, because remember, I explained this 4-hour buy program. In this 4-hour buy program, we could just come down to a discount to then continue higher. So in that case, depending on what the structure on the lower time frame tips its hands to, we could be taking a silver bullet to the upside. Again, what we'll be doing is we'll be watching the 15 and 5-minute to try and see where our higher time frame is going. Getting pretty heavy off the open. Again, remember, it's this it makes sense since we are doing this. So this is really showing me that we're delivering the sell side of the curve in this market maker sell model. But again, we can't get too, we have to find an entry. So just because it's dropping, don't panic. We have a very large opening range gap. Again, see, don't panic. We're basically right back where we opened. Again, we're going to be using the 15-minute and possibly the 5 to confirm our narrative. So we have this order block here, and we have the sell side that we just took. This could be an area where it would want to reverse. Because our higher time frame narrative is to the upside. We are also on the lower time frames, so we closed above this volume imbalance on the 4-hour, and do we do it on the daily? And on the daily. So we have to see if it wants to kind of use it as an inversion. I think if the 5-minute starts printing bullish structure, I'd be more inclined to say, this is just a retracement for a continuation higher. Especially if we were to get above this 5-minute high. That would kind of like confirm it. again, so let's frame our liquidity. We have this lunch low from yesterday as our sell side, which we ran prior to market open. For upside, it's pretty high. I would say, let's say this 15-minute high is the next buy side. But so we have liquidity pretty far. So let's just be patient. As for sell side, our next liquidity is this low, the top of this original accumulation, and this new week opening gap, and that closest one is still pretty far. So since we have some distance between our areas, let's make sure we can really confirm what's happening. I like that we didn't come up above this high. We kind of treated it as an order block. As you can see, this really big wick right here, this drop down, that didn't happen on ES. So this is a lower low. So that kind of makes me inclined to believe that that could have just been a shakeout of liquidity. We'll see. So since this happened on NASDAQ, I view this as a pretty significant low. I'd really want that to be taken before any shorts happen. And I want to watch how price respects it. So see how we tapped into this last down close candle before. You can see the bodies on the 5-minute don't want to get below this swing low. So the bodies tell the story, because even look at ES, the bodies don't want to get below that swing low too, but the wicks on NASDAQ did, and the wicks are what do the damage. So if we get above this high, let's see. I feel like normally in market maker models, seeing a wick like this is pretty unlikely. Like if you look at the buy side of the curve, like these two accumulations, none of the wicks are too giant. And usually it consolidates and expands, consolidates, expands. And then it might have retracement, but it never has a wick this large. Especially at the level we're at too. This order block with this sell side liquidity, with this being the 50% on this 4-hour range from top to bottom. 50% lies within this purple volume imbalance, meaning if this was a retracement to go higher, it just hit its discount to then sell at a premium. We did take a loss on the account yesterday. I didn't live stream it. I recorded it, and I am planning on kind of doing a market review over it, but just to give you a little bit of heads up. I think it'll be a long video, so trying to need to carve out a solid chunk of time. Um, Paying attention to the 5-minute body closes, especially how our 1-minute bodies handle this opening range gap. Does it show no willingness to close a body inside of it? That's pretty bearish. But again, looking at this 15-minute, that wick and the bodies. So what we're doing is we're wicking over this sell side level. Again, the sell side is the lunch low of yesterday. So we're putting some wicks over it, but our bodies don't want to close below it. Even on the 5-minute. Again, if you weren't here in the beginning, my apologies for the audio quality. I am currently doing this with headphones and not my normal microphone because I'm traveling. And right now we just have to wait. So I do I do think I am liking where this consolidation is happening on the 15-minute. Again, so I'll map out. Sorry, I know it's getting really scrunched right here, but if we take the top down to, let's say, this new week opening gap, it's right at the 50% level. So we still have a whole 50% of our implied dealing range that needs to be delivered. If you can see, so if you know how the market maker models work, we can use the PD arrays on the buy side inversely when we are delivering sell side. So we have these order blocks right here. You can use that. It's hard to see because it actually lines up right at the top of this purple level, but it says buy side OB used inversely. laid another body in that 5 minute or in that 15-minute fair value gap. You can see on the 5 minute we just wicked slightly above that 5 minute high. Would have been better if we got into this in efficiency, but if we on both indices make a new low, I will like downside. So as you can see, ES is making a lower low. But what I really want to see is NASDAQ also make a lower low. And then when that happens, I'll take this SMT off. And what I'm doing right now is really, again, it's building the narrative. So you can use other ICT concepts. So right now we're, framing out this whole market maker sell model, but our entry model and our trade model is going to be the silver bullet. And what we're gonna try and do is execute that silver bullet trade in the narrative that this other, model, the market maker model, inside of that. Again, notice this 5 minute candle is the first body, so we still haven't had a body close below this swing low. And it looks like this 5 minute candle is about to, but that's what I'm looking at right now. Okay, I'm watching the dollar in the background here. Remember, the dollar is this yellow line. Looks like it's heading down. If you look at the 5 minute, we do have this fair value gap on the dollar. Let's see if it respects that fair value gap and continues higher, or if it disrespects it and goes for that low. If it disrespects it and goes for that low, I really think we're going to see some higher prices. We can kind of watch that in the background here on this yellow line. I know it's a lot, but I think this is the best setup that can kind of show you all the important things on one screen that I've found. And I like the way downside is looking, but just remember where this consolidation is pretty tight. So price could easily get above these two highs and that be a completely different story. Especially if we have this SMT right here. The dollar looks like it's gonna. We still have a minute or two left. I was gonna say, it looks like it's gonna close outside of this fair value gap. And again, just reiterate, if it's closing, if it's gonna go for these two lows, we don't want to be trying to trade short at the same time. The dollar will be making a new low of the day. Watch another 15-minute candles closing. 5-minute candle. If it closes above this down close, I think that'll be significant. Dollar does look like it's going to target those lows. You can see in the background. It's getting a lot closer. So we had this 5-minute candle close above, this down close, 5-minute close above, and erase that. It does, I'm waiting to see if the dollar takes these lows and we go upside now. Okay. I'm also going to want to see, so when 10 o'clock does hit, I'm going to want to see a very strong willingness that the market wants to go in a certain direction, because if it looks anything like what we've got now, then I'll probably stay on the sidelines because remember we have the FOMC meeting minutes at 2. So I would hate for there to be kind of like the market being held in consolidation in the morning and get caught up in that. And it was really in consolidation waiting for the 2 o'clock FOMC meeting minutes. I think anytime you see a 5-minute pattern that looks like this, it's a full body down close followed by a full body erasing that and then another full body. That in itself is like, be patient. Remember, we want to trade movement. We don't want to try and get caught up trading sideways price. I'm pretty undecided right now on the direction come 10. I think I just want to wait for more information. We have this large 15-minute wick that looks like we're going to close a body above it. So we're going to respect the consequent encroachment of that wick. We have the dollar looking like it's getting ready to make a new low for the day. So you don't want to be taking shorts if the dollar is making daily lows. Again, I value this low very significantly for NASDAQ. If we close below it, if we don't close, I want us to close below it before considering shorts. So these are using like confirmations. Like I want, not only do I want to see it close below it, I want to see the dollar going higher. I want to see ES also making a new low. And I want it to be a body close. I think I'm happy with how I'm happy with just the idea of like not really picking a direction yet. I don't think I'm not really torn between anything right now. I think it's been very undecided price action. Again, so we have this low, but look at the dollar. Let's wait and see where the body closes. ES didn't make a lower low, even with the wick. Body didn't close below this wick. Dollar is looking heavy. 5-minute body is below that low. Again, especially with the dollar looking that heavy, I am very hesitant to take a short. We have taken a lot of sell side on these lower time frames. Sell side came down, sell side. You can see here we placed this wick above that high, which was also a 5-minute swing high above that high, and that's what kind of allowed it to dig deeper. Came up, failed to take that high, came down lower below these lows, but is not showing a real willingness to want to continue lower. The dollar looks like it's 5-minute is placing a wick, so couldn't close a body below that low. Dollar is rebounding decently after taking. So it wicked below this 5-minute swing low and couldn't close any bodies below. Now it's retracing higher. I do like that for shorts. Again, That was not a lower low for ES, but they are equal lows, not ES. Look how strong this 5-minute candle on the dollar is. Starts closing candles above these highs. That'll seem pretty indicative of higher prices, high dollar prices. We'll watch it in the background here. Interesting. Again, nothing really jumping off the charts. See the dollar. At one point, this up close candle was very strong, but now it's printing a decent sized wick. I'm wondering if what, so we're getting a 15-minute retracement tapping into this up close candle. Again, mostly sideways right now. So I heard this one guy explain, he was explaining or talking about ICT's concept of time distortion. And I believe ICT describes time distortion as just basically moving, it's consolidation. But um, what it's really doing is the algorithm's trying to pass time and until it gets to like a specific macro time where it wants to then act on the liquidity that it generated during time distortion. But I liked what this guy had to say because he was like, when you think about it, it's working very strongly against natural human emotions. So like we always, you always hear like you have to be patient to be a trader, but like what is patience? What does that mean? Being patient, like the actual, what that physically looks like is not doing anything in price action like this that you're seeing right now. And he was like, yeah, like when he was like, when he's framing it in the context of like the algorithm is doing this on purpose to get impatient people trading, and then what it does is all those impatient people are trading, they're like moving their stop back, um, or they're just like switching directions because the consolidation oftentimes, you know, can really, you can see both sides in it, and it's getting all those impatient people pressing buttons. And then when it's done, it's like, okay, now we're just gonna go this way, and it really kind of traps those people that didn't wait. And then when I think, maturing as a trader is it's really, so if the market was to just drop right now and leave us with no entry, I wouldn't be too upset with that because I don't think there wasn't anything where I was like, in hindsight, I'd look back and be like, ooh, like I would have saw that. I saw that in hindsight, but I just couldn't see it in real time. Nothing's too obvious right now. If it was to drop, what would have been the entry is this fair value gap, which would have been the 15-minute retracing into this up close candle and treating it as an order block and then going lower. And you could enter in on this fair value gap and put your stop right there. But I want something a little more robust, I guess is the word. We do have the dollar. The dollar looks like it's about to make this hot, take this high after this wicking below. Yeah, so I think it could go down. I mean, look at this one candle right here. It's moved a lot. Kind of have this whole hour that's just waiting. 12, so lunch hour. Come one, expansion. This candle's looking a lot like that one. But I just want to make sure that I'm not, getting caught up in the time distortion. Because another thing too is the market could like before it goes lower, it could really like run some highs. It could like get above these two highs and then drop. Oh, is it going? Save the look. That's a lower low, but it didn't do that on ES. I have this 1, 2, 3. It is looking like it finally wants to get heavy. But I want to see some big candles close. Yeah, see, not like that. What I'd want, when that candle is a full down close candle, I'd want to see like 3 of those. But the dollar it does seem like it wants to continue above this high. So maybe in a few moments we will see some heaviness. And remember, just being the holiday week, this is the time when you just got to be even more selective, more picky. Size down. Okay, so yeah, I mean, if you had entered on this, you would have got some, you would have got some movement, but it seems a little, it's not that clean, a little random. And if it continues to just melt downwards like this, I'm also okay with that. Okay, let's see if that closes. Looks like it's also a low, new low on ES, so that's what I was looking for, then making the same lower low. I want to see it close strong. I want to see how these next two candles print. I wouldn't mind. I could see it returning up to this, treating this as an order block. That would also be in conjunction with that fair value gap. And I would like that as an entry. Dollar, looks like it's going higher. So put the stop. Where's the top? Again, could just enter in here and then continue lower, but I want to try and demand a little more out of it. You can see ES. ES did enter that fair value gap right now. So we'll see if it just drops. Pause this maybe. Do we want to go over to ES? So I think if ES delivers that 5 handles, that will definitely be the silver bullet for ES. Sometimes it doesn't deliver on NASDAQ. It's okay. Damn. I don't know why, but my mouse sometimes seems to be lagging. It is an old mouse. It's like there's like a delay. Okay. Yeah, I think went 3 handles. If the dollar continues. Oh. So notice how ES took that sell side there. It took it with this displacement lower. Go back to NASDAQ. Yeah, we have the new week opening gap down here. I'd love to use that as a target. Have a little fair value gap that just formed. So it might go and not give us an entry again. I'm fine with that. Um, I'm fine with that. Like I said earlier, if there was an entry, it was kind of this fair value gap with your stop above there. And what that's really doing is it's kind of this 15-minute candle coming up. But I looked at the open high low close. It didn't even really come up and touch the bottom of that. It looks like it did, but I think it was a point or two off. But sell side is delivering, and it might do it without us. That's okay. And again, remember, you have to start getting a little cautious the more if you've taken these sell sides. I mean, just because the new week open gap is such a straw draw, I do think it will go down there. But when you do take these sell sides, it in theory can be all the liquidity it needs to then turn around. ES also made a fair value gap there, but did not enter into it. Dollar, you can see the dollar going higher. This is one of those things too where you might see some people online, I don't know, depending on like how you use social media and who you follow and if it's trading content or not. I used Twitter. I did use it when ICT was tweeting, but I'm kind of trying to dial it back now. And you just might see like some other people might have be like going down to like the 15 second, or saw one guy do like the 5 second, and it was like finding 5 second entries, and it's like that's cool and all, but just make sure you don't get caught up in that thing where it's just like, are you trying to find like a shiny new thing in the form of like a new time frame, or like maybe we should just master this 1 minute because the 1 minute is pretty low, you know? And if you haven't really mastered the 1 minute, then I don't think moving to anything below it is going to help you much. Yeah, so just be careful of, don't get caught up in thinking like, oh, well, these other guys are trading on the sub 1 minute and there's probably an entry right here. It's like, you need to find profitability in what you have already. Well, it was fun watching this market maker sell model deliver. Again, I think high probability is getting to the new week opening gap. Depending on how it trades through it, I wouldn't. I would make sure you're like heavily scaled out by that point. Yeah. ES was even worse than NASDAQ, it looks like. It was just a lot more sideways. At least NASDAQ was kind of like, making a wick lower low, kind of retracing higher, but failing to go higher, and then it would like wick. ES looked just like almost like a perfect barcode. I would, if it retraced up to here, depending on how it did it, that could interest me in an entry. I'd want to see it happen really quickly. Nah, no, I guess I'll probably be best to pass. I mean, most of the move I feel like is delivered. And again, remember, your safest entries would be like 50%. So remember when we drew the fib, 50% was like right at the top of that purple volume imbalance. Yeah, so it looks like ES was probably the move. Yeah, ES was the move right there. I was hoping it delivered on NASDAQ, but that's fine. There. I think so for next downside levels, I do that low, which also coincides with the top of the original accumulation. Then if you were to get through that low, the new week opening gap. I think it gets a new week opening gap. I love using the new week opening gap as targets. It's like trade target. I wonder if NASDAQ would get back to that. This fair value gap. Looks like they both hit that one. In terms of NASDAQ, I'd want a deeper retracement. I think ES, it's the Dow. ES kind of came back and hit this one, which I like in terms of ES. Again, I'm way more used to how ES draws back. So, for example, I would not expect ES to come any higher than this. NASDAQ, I am not as good as reading. I haven't spent as much time reading it. So, for example, like in the past few weeks, now that I'm looking at NASDAQ more, like I would enter here, but then it's drawed at, it could like retrace like way higher before continuing. I'm just not used to its ebbs and flows, but it looks like, see, that's what you like to see is when the wick goes and then the body, like the body just really rejects it. So that's good to see. It'll probably head for the new week opening gap now. I do want to watch and see how this delivers. I would have expected it after retracing, so see how quickly it went for that inefficiency, and then the body closed, and then we had this pretty large down close. I would have expected that to continue. So this is one of those things where I would like to just sit back and tape read it. Because, if we did enter that trade, now it's like how would we be reacting? Our entry would be at the bottom would be fair value gap. So a retracement back is fine. Our stop would probably be at the top right here. the dollar. Well, the dollar looked like it failed to make a higher high right here. So you came wicked right into consequent encroachment. Again, yesterday, I did trade yesterday and I will be doing a review video. It was a pretty, I think the video will be a good teaching lesson at my own, you know, failure. Um, it was not good trading. It was sloppy trading and it was emotional trading. That's what really makes me mad is when I trade emotionally because everything else, if it's, not emotional, then it's just like you were technically wrong. But when I get emotional while trading, that is kind of when I feel a little ashamed. I overtraded. The loss, the day wasn't a big loss. It was more of just like a lot, just kind of chasing price. And I think, I've live streamed myself here enough for you guys to know that like I can normally I'm very disciplined in the, one and done trades. So, but I do want to make that video because I think the topic of it will be kind of how trading is, you know, just an ongoing battle. You never just nothing that ever just magically clicks one day. It is a constant fighting of to be your higher self versus your lower self. So what happened yesterday was I was just out with friends because I'm back home. So I was out with friends Sunday, just late, and got back to my house late. Um, like woke up late, and I woke up like 20 minutes before the market opened, and just wasn't ready to trade, but decided to trade anyways. And I want to in that video I'll probably touch on, a lot of the psychology around like making sure you're in the right headspace to trade is very important because you you have to think of trading as you're about to go into like a psychological war with yourself. It's like you have to make sure your higher self wins and you're not succumbing to greed and fear, impatience. And if you're tired and exhausted and like barely awake, you like what are the chances? Like the odds are against you. And you can definitely see that in the video. So what I'll do is I finally uploaded to YouTube. You guys can't see it, but I will be doing a recording of me recording over that video. Yeah, in terms of this trade right here, see, I'd be sweating a little bit. We'd definitely be in some drawdown right now. Your stop would have to be up here. But it's one of those things where it's kind of why I didn't take it because we already took so much sell side. And remember, we're framing this in the context of on the 4-hour daily and weekly, we are expecting continuation upside. So this could easily be just a pullback on these higher time frames to see more prices. So when we already deliver to the most obvious levels of sell side, like I thought this was a very obvious level of sell side. When we already deliver through that, you really want to make sure, are you actually targeting a high probability level of liquidity or are you just kind of chasing price? So if you guys were here in the beginning of the video, I kind of did a whole breakdown on how, in the higher time frames, this could be a pullback for a continuation higher, and we want to make sure that our trade narrative is framed in the proper context. So it would make sense to kind of short from up here to these more obvious, okay, not the 1 minute, these more obvious levels of sell side. So this was the Monday lunch low. It's very, I like that as a target. But once you start getting deeper into this discount on the higher time frame, you want to be careful you're not trying to short at the start of a buy program. And for market maker models, again, okay, on NASDAQ, we did return to the original accumulation, the top of it, and we did take that sell side level right here. Again, usually it's nice if you can get below the original accumulation, but you don't have to. And just like looking at where we are in terms of this whole market maker model, yeah, like me trying to enter here just so I can catch the move down to this new week opening gap, that was a little too risky for me. I think I didn't like the probabilities. On ES, it looks a little better because we never took that second level. So the sell side, we never took it on ES. You can see it down here. We never touched the top of the original accumulation. But you need to read both of these markets as a whole. You read them together. Um, so, yeah. Let's see. I wonder if maybe NASDAQ will retrace to there. And then finally deliver to the new week opening gap. I don't think it has to deliver to the new week opening gap. But again, so going to the 15-minute where we framed this market maker model on, yeah, your best trades, your safest entries would be in the upper portion. So if we were targeting this new week open gap as our implied range, up here, above this purple area, would be the safe entries. And as you can see, if we did enter playing off that narrative, we would have delivered, or we would have, been able to catch this move. I didn't like the way price was delivering on this lower time frame enough for me to be convinced, but we did get it. But yeah, so like entering up here would have been ideal. The price wasn't the best, so we didn't do that. But again, just because you saw the move deliver, it's not like entering right here is any more ideal than entering up here, because you've already delivered so much of that sell side curve. Though you still be in this trade, if you entered at the bottom, you put your stop right up here. But I'm okay with sitting that out. Looks like with ES, you would have gotten stopped out. So you entered on this fair value gap and put your thing at the stop loss, your stop loss at the top, it ran you out. But where are those bodies close? Bodies are also, yeah, see, good trade. I'm curious as to what. Oh, are we in 1050? We are in the 1050 macro range. Yeah, it is rough when price kind of melts down like this, and we were expecting it to go down. We were framing this market maker sell model, but it doesn't really give you much of an entry. Like I said, this could have considered that an entry. I didn't really like the discrepancy between these lows that, ES didn't make a lower low here. It didn't make a lower low here. I didn't like that. As we close out the end of the year, again, these aren't the best times for price. A lot of holidays. Um, it's not the best time in the market for like precision delivery. But again, we just have to reiterate that we don't have to trade every day. See here that retracement, the candle bodies respected the mean threshold of this up close candle, this order block. Same story whether you include the wicks or not. That could be a little entry right there. Put your stop above that high. Wouldn't be too bad. Just because you'd be able to have a tight stop. And if it like got above this high, then it's 100% not going lower. You can see on the 15-minute enter the fair value gap. It's also a retracement on the 5-minute. Dollar's going higher. Yeah, that would have been decent. Or yes, there. Yeah, I am curious. I do want to kind of stick on and see, was this a retracement to go to finish off at this new week opening gap? Or did it take all the sell side that it wanted? The dollar going higher. If you get below this low, there's not much room between that low and the new week opening gap. We have these two 5-minute candles that we traced. We had this one 15-minute candle with the entry into the 15-minute for value gap. So yeah, if we started to go lower, I mean, it's definitely a retracement higher. I think it would really have to happen now, though. I mean, there are times when, it might look a little sideways on the 1 minute, but what was really happening was we were just kind of retracing into an inefficiency on the 15-minute, and then once you see that 15-minute, so you can see where we met this mean threshold was within this 15-minute candle. So that's usually nice to see that you can see the two time frames kind of working with the PD arrays working in sync. But then, once the 15-minute retraces into that, we have this 1-minute break below the swing low. Then you'd be like, okay, it retraced into the efficiency that it wanted to, even in the higher time frame, to deliver lower. So then you'd really want to see it deliver lower. The dollar's going higher, so I think it looks like it's probable. But again, these two lows, this red line right here, this red line, those were the liquidity levels that it really wanted to attack, as you can see with how quickly it moved there. Up here, how quickly it moved. Cool. Well, I'm gonna log off. Enjoy the rest of your day.